Hello, everybody, and welcome to our virtual tax school with topic today being maximizing Schedule A tax deductions. We're excited that you're joining us today for this yet one more instance of the virtual tax school. We've had several already in 2022, following popular sessions on maximizing Schedule C deductions, Schedule E deductions, introduction to 1040 tax returns, and of course, today again, maximizing Schedule A deductions. Now, I'm very pleased to introduce our speaker for today, Mr. Anthony Sampson. He is an enroll agent and solution architect for Wolters Kluwer Tax and Accounting. And he'll explain what that means, but I'll let you know that he has done this presentation several times. He is a known speaker within the tax industry. He does presentations live and also online. And he brings a lot of expertise from his experience as a practicing enroll agent, but also his experience as a solution architect for us. So he has understanding of both sides of the industry, what you're facing as a tax professional and what it takes to create and develop a tax preparation solution that matches your business needs. So with that, Anthony, I'm gonna let you introduce yourself a little more, and we'll go ahead and get things started.
Absolutely, Luis. Thank you so much for giving me this opportunity to speak at this conference, today's virtual conference, today's virtual session. My name is Anthony. As Luis said, I'm a practicing enroll agent and a solution architect here at Wolters Kluwer. In addition to that, I've spent pretty much about 12 years in the industry in tax and accounting. For the last 10 years, I've actually been a practicing EA. I have a degree in accounting, and I've pretty much what a solution architect is at Wolters Kluwer, someone who actually spends time with our customers, with practitioners, CPAs, EAs, and various different practitioners, and really helping them get a good understanding of what our products do, being like providing that product knowledge, being a subject matter expert, and walking our customers through typical ways to be able to use our products, or the best way, I should say, to be able to use our products. So we got a lot that we want to cover today on our presentation. Now, please keep in mind the chat is open, and there will be a polling question towards the end, but the chat is open. So if you feel like you have any questions that you want to ask, please feel free to post those questions in the chat. I've got some moderators there that can help and assist to that, and we'll also take some additional questions at the end. So for today's objective, today we're going to focus on strategies on how to maximize your client's tax refund when it comes to Schedule A itemized deductions. I feel like since the Tax Cuts and Jobs Act has been passed about 5 years ago, about 4 to 5 years ago, that this schedule is a little bit neglected, right? Schedule A has faced a little bit of some neglect. So we're going to walk you through specifically on how ways to really bring that topic back up to importance, but also to when should you force your itemized deductions. So maybe you've taken the time, you went through those itemized deductions with your clients, but however, it's maybe in your best interest to force the itemized deductions when the standard deduction may be higher. Now, for those of you that are, have state returns like me, I live in Atlanta, Georgia, the metro Atlanta area, I've got a state return. But for those of you that are in Florida and Nevada and things of that nature, you don't have a state return. So sometimes forcing may not be so beneficial to you, but we'll walk you through what's the best case scenario. And then also maximizing charitable contributions. Sometimes that can be overlooked. Sometimes that can be overlooked as well. Now, I want to kick things off with a little funny joke here and kind of get things going here. I want to ask a question for you since we're talking about itemized deductions and medical expenses. Are weight loss programs tax deductible? Someone go in the chat box and say if you think weight loss programs are tax deductible. Go ahead and put that in the chat box if you feel like those items are tax deductible. Feel free to go ahead and enter that in the actual chat box there. So do you think weight loss programs, so if let's say I'm trying to get in shape and I've got to get in shape, so can I deduct a weight loss as a
And Anthony, we actually have it as a polling question if you want me to launch it.
Oh yeah, absolutely. Go ahead, Luis. Thank you so much. See, Luis, thank you.
Are weight loss programs considered a medical deduction? The answers are yes, no. And again, even though this session is not eligible for CPE and CE credit, it's important to keep you engaged. And based on your answers, Anthony, you'll be able to address the medical deductions and maybe address some of the concerns that we see from the audience. And so far, it seems like a pretty even split, 50-50, 49-15, 51. So very interesting responses, as we usually get for that same polling question.
Absolutely. So good. So we got a good response. So let's kind of walk through it here. And I'm going to show you a couple practical examples inside of TaxWise. And in addition to TaxWise, we also have a product. We have a couple products that can help you walk you through this process of determining what's deductible and what is not deductible. I'm gonna go ahead and just kind of push our next slide out here for you and walk you through that here. And we'll see that we've got a list of deductible medical expenses. So on the left-hand side, you'll see that we've got a list of items that you can deduct on the tax return, such as acupuncture, ambulance services, bandages. And on the right-hand side, you've got a list of things that you can't deduct. Now, I just want to bring a couple of things to your attention. Really what the purpose of this presentation is, yes, we're going to go over some itemized deductions and walk you through it, but I felt the need to really develop this type of content for our customers here at Wolters Kluwer, or for anyone, is because sometimes clients, the only time of the year that they actually see a financial professional is when they sit in your office or when they submit their documents to you, right? So you are that financial professional, that tax professional to them. So no one else is looking at their finances in many cases throughout the year. So being able to be a point of reference and ask questions. Sometimes clients just have a cadence of just turning over their documents or W-2s and 1099s. And about 10 years ago, I had a client, very similar scenario. I did her taxes and everything. I was working at Jackson Hewitt. She gave me her tax documents. And when I got done, she was getting a pretty big refund. And she said, I don't feel like you did a thorough job doing my taxes. And I was shocked because, hey, do you want a bank product or do you want to pay out the pocket? I was really, she was getting a pretty big refund. She had a few kids. She was a single mom. But she said the previous tax preparer, the previous professional that worked with her last year, asked her these questions. They asked her, well, do you have any medical expenses? Do you have any, eye exams, hearing aids, things of that nature? Do you have any expense money that you spent money on for your health, for you and your family, for your dependents? And, she was 100% right. I didn't ask her any of these questions. So even though she was getting a big refund, she really wanted some information, some knowledge. So the thing that I want to encourage you is take the extra time with your clients to go through these deductions and really get a good understanding of this. Okay, well, do you have any do you have any eye exams, any eye treatment, hearing aids, any home improvements, things that need to be done? Because sometimes we don't think about this. That maybe they have a dependent mother or a disabled dependent that they're taking care of, and they had to make some improvements to their home for the purpose of medical care. We had to do that for my grandmother when she came to live with us. So you want to take some time to really kind of go through a list of items like this. Now you'll see on the right-hand side, we got items that are not deductible, right? Think about it. Let's say household help, right? Paying somebody to clean your house. It depends. Funeral expenses that are not deductible. That's deductible somewhere else. Cosmetic surgery if it's unnecessary, right? Teeth whitening services. I know we all like to get our teeth whitened, things of that nature. So on the right-hand side, you're going to see things that are not deductible. Now, something that I found very interesting out here. You see where it says birth control pills? That's deductible. And you look at the bottom of there, you see a vasectomy. So you're going to get a tax deduction for preventing children. I'm just joking, just kidding. You get a tax deduction from the government for having less children, just kidding. But these are items that can be deductible. Now I want to answer that question for you. Someone asked, I asked, our weight loss program is tax deductible. And so we have a product named Answer Connect here. And Answer Connect is where I got this list from. Answer Connect provides a list of all of our taxable tax information on a federal and state level. And this content was written by a CPA, Miss Natalie Bryce. And on our Answer Connect subscription, notice that there's no advertisements or anything like that on here. Here's that list. So the question I asked earlier, our weight loss program is tax deductible? And the answer is yes. Weight loss programs are tax deductible for treatment of specific diseases diagnosed by a doctor. Okay, so going the extra mile, because clients may say, yeah, I have medical expenses, but they haven't paid them yet, right? It has to be medical expenses they actually paid for. But I want to walk you through what would it be like to do a client's return that has some actual medical expenses. So I'm going to go ahead and pull up our TaxWise solutions. That's what we're going to be using for our presentation. We're going to be using our TaxWise virtual tax office product. Let's walk through some practical examples of a client who has medical expense deductions over here. So I'm pulling up on the screen here. You should be able to see, let me just make sure you should be able to see that directly on the screen here. And right now we're looking at Miss Schedule A. So Miss Schedule A over here, she lives in Atlanta. She lives right outside of Atlanta. She lives in Kennesaw, Georgia. She's 42 years old. And looking right over here, I'm going to click on the Schedule A. Oh, before I click on the schedule, let's kind of take a little bit deeper dive of this for a second. So her AGI is $50,000. So Ms. Schedule A, she has a W-2. Let's click on the W-2, and she made approximately, but just about $50,000 last year. She's in the process right now of getting a nice tax refund of $3,435. So that's good. She's getting a state refund of $1,248. So that's really good. So let's kind of walk through this here. So I'm going to go click on the Schedule A. Now, Schedule A has been overlooked. Schedule A, let's look at the Schedule A and kind of walk through these deductions over here. So unreimbursed medical expenses. So it has to be in excess of 7.5% of her AGI. So our adjusted gross income is $50,000. So her medical expenses need to exceed $3,750. So let's kind of walk through what these deductions actually look like. And I have something over here. Let me just kind of clear those answers up for just 1 second. I got some of my answers in there from my previous session. All right, so let's kind of walk through what some of these deductions will look like. So before we do this, here's one thing I want to bring to your attention. Medical miles. That's important. How many of you are talking with your clients about what the medical mileage deduction is? That's something very good that you want to pay very close attention to about the medical mileage deduction. So looking at this, you can see prescription medicines legally obtained, not illegally, legally obtained, insulin, doctors, dentists, nurses, eyeglasses. So we have a list of when your taxpayer is actually going to get these services performed, or they're actually traveling to pick up their prescriptions. So you want to work with your clients the same way how you advise your clients about keeping up with their mileage as it relates to their business commutes. In the same reference, you want to keep up with your clients, encourage your clients to keep up with their medical miles. So going to the doctor's office, going to buy the eyeglasses, maybe going to get their vaccine, right? Maybe they're going to get their vaccine shot, right? Those are tax deductible. That's tax deductible mileage deduction that you can take. So medical miles, let's look at this over here. So let's say, for instance, our client over here has approximately 397 medical miles. The taxpayer does, right? And then the spouse, we have the spouse here. Let's say the spouse has approximately 893, right? So altogether, it's 16 cents a mile. So for 2021 returns, so think about it. If you still got some clients that are on extension, which many of us do, if you still got clients on extension for 2021 returns, it's a 16 cents mile deduction. Did I say 2016? I hope I did. It's 16 cents a mile deduction. We'll talk about the change on that in just a few moments here. But altogether, you can see the taxpayer and the spouse, $1,290. Now, this could be applicable to the dependents. Maybe they have a sick child, right? Maybe, I've got 2 kids myself. I got to drive my daughter to the doctor or to urgent care or something like that. If she's not feeling good, that's also tax deductible. Don't just think about it as a taxpayer, the spouse, and the dependents on the tax return that you're having to drive to or travel to. If you got to take public transportation, that's a different story. But those medical miles that are driven, that's tax deductible. So altogether, right now we got $206. So I was saying, okay, that's not enough. Okay, that's not too big. It's definitely not enough. But we've got $206 over here. Now, before I kind of start filling in the boxes over here, we talked about the weight loss program. Now, if the weight loss program has been prescribed, if it was prescribed by their medical professional, right, saying that, okay, you need to have a weight loss program for your treatment, for you to be healthy, then yes, that can be tax deductible. Another thing that comes into play is fertility, right? How about fertility? We were at a conference last month, and a tax professional came and spoke to me about that. What about clients that freeze their eggs? I got a friend of mine, she actually froze her eggs, right? So fertility treatments, that's also tax deductible. So let's think about this for a second. So let's say fertility treatments, and those could be expensive. Those could be very expensive. So if the clients have to actually physically pay for it, they just can't have a medical bill. And they could pay for it from their credit card. They could pay for it, care credit. They could definitely take out an installment loan or something like that. Or maybe the client took out a loan to pay some of the medical expenses. As long as it's been paid, and it's not just a medical bill that's sitting there as unpaid. So paid medical expenses are tax deductible. So I'm gonna go ahead and put $4,500 for fertility. I've got weight loss program over here at $1,200. And then now medication, right? How about the medication that clients are taking, right? Medication that clients are taking. So let's say this client is taking, now medication could definitely be expensive. So this will work in your favor when you have clients that are maybe older in age, right? Maybe clients that are elderly and they have to get medical care, medical treatment, and medication, right? So I'm going to put down $1,930 for medication. We've got doctor visits. Doctor visits, I'm going to put down 3,000. Oops. Move the next line. $3,030. And if you notice how TaxWise has a list of items, and if I need additional, if there's additional categories I need to put in, I can link over here to what's called a worksheet. And this worksheet will link me over. I could see to add more items over here, but I can link into a worksheet and add additional items to this list. So I'm not just limited to these little lines over here if I need to link into somewhere. So I'm going to click over here on dental visits. Dental visits, we've got $1,700. I got to get some teeth work done, some dental work done. Eyewear, right? Driving to get your eyes checked, right? Having an eye exam, right? I got an eye exam done last year, right? Getting your eyes exam, that's a tax deductible expense. Now, your client may want to go to the other side of town to get their eyes examined and take the tax deduction on that. But we definitely got to be legitimate, respectful, and not be trying to abuse the tax code. We want everything to be legal and ethical deductions. So eyewear, we're definitely going to go ahead and put in here $750 in eyewear, and we've got the weight loss program. Now, you want to talk about, now before we do that, let's kind of go a little bit further up here. Let's take a look for a second. How many of you have clients that they don't have health insurance through their employer, so they don't have health insurance through their job, and maybe they're self-employed or they're paying for health insurance through the Affordable Care Act? So if they're paying with out-of-pocket, excuse me, if they're paying with after-tax dollars. So when you work for an employer and it's pre-tax, meaning that they pay the health insurance before they get taxed on it, so it's after it gets taxed. But in this case now, if they got health insurance premiums that they're paying after tax dollars, then you can deduct it over here. Right? You can definitely deduct it over here. Another thing, how about qualified long-term care? I'm sure you may have clients that are up there in age and they're with their geriatric care, right? Getting the geriatrics. I was speaking with a firm yesterday. He said he has some clients that are paying $15,000 a month for geriatric care, right? So paying long-term care insurance, those types of things. So you want to make sure, and even if the client is not taking the deduction this year, it's about education, right? Maybe your client may have an elderly mother or father that they need to that they're planning to put in geriatric care, long-term care, maybe a year or two from now. This is a planning opportunity because the goal of this is to become sticky. You are the financial professional in many of your clients' life. You are the go-to person, right? So educating the clients, because remember, you're gonna have higher retention the more you educate clients versus just taking their documents, shooting out a tax return and saying this is how much your refund is. You want direct deposit or do you want to get a bank product, right? So being able to kind of walk the client through this. So right now we're looking at this, and we've got $12,566. The client, got some fertility treatment done. They've got some eyewear, doctor visits, dental visits, and all this. Now, I remember when I first started doing taxes, and I thought I was going to be pushing papers. I'm an accountant. I'm just, calculating things, crunching numbers. I didn't know that I was going to have to be getting involved in these people's lives. When clients come and say, "Yeah, I got my fertility treatments" or things of that nature, like, okay, I don't want to know all that. That's too much for me. But we can see right here that we were able to accumulate $12,566 in medical expense deduction. So if I come back over to my Schedule A in just a brief moment here, looking at my Schedule A, you'll see, okay, so my 7.5% is was on my AGI, $50,000. 7.5% is $3,750. So anything above, any expense above this $3,750 is deductible. So my total medical expense is $13,316. Notice now we're at $9,566 as a medical expense deduction, right? And remember, you want to educate the clients. Don't just say, do you have medical expenses? Not really, and just move on. They may have some next year. They may be having some. They may be planning for some next year. I know I'm planning to get some dental work done next year. All right, so that's some of the medical expense deduction. I want to just simply bring something up on the screen over here, and let's kind of go back to the detail worksheet. And when I go back over to the detail worksheet, you'll see, let me just move this over here. On that detail worksheet, I had that medical miles at 16 cents a mile. Well, something happened on July 1st, 2022. What happened is the actual mileage medical expense deduction went up to 22 cents per mile. That's a significant increase. That's a 6 cents increase, right? So it's becoming more beneficial, okay? Because remember, gas prices it's becoming more expensive, inflation and things of that nature. So the IRS is allowing more a higher tax deduction for the actual medical mileage deduction. All right. So let's kind of check here. Let's see if we got any questions that came in. Let's take a quick look and see if there's any questions or anything that came in the chat. It looks like we have a question that came in. Someone's asking, Can you go over, if you're a football coach, I remember doing a seminar about the nonprofit organization sports. Yes, yeah, we'll talk about the nonprofit deductions. Great question, Crystal. Crystal's one of our followers. Thank you for coming back again, Ms. Crystal. Absolutely. Someone says, does this treatment have to be done in the States? That's a very, very good question. If the treatment has to be done in the States, that's a good question. If you can put your Consuelo, if you could put your email address in there, we can do a little bit of research on that and find out about that and email you. Absolutely. Now, one thing I do want to bring reference to in TaxWise is actually going to be a difference, an upgrade in TaxWise. So typically right now, let's bring this back, TaxWise back on the screen. So TaxWise right now, we have it like this. And currently in the current setting of TaxWise, we integrate with a product called Answer Connect. So Answer Connect is our professional tax research tool. But one of the things we're focused on, we realize we want to make things easier for our customers. So with Answer Connect, clients can come in, they can type in questions. They can say, okay, medical expenses. I could just start typing items in Answer Connect and pulling items up. But we realized over here that our customers, they have to go to a separate screen. They have to open up Answer Connect and things of that nature. It's just a little bit extra work. And sometimes there can be an excess of a significant amount of data in here. So we recognize that we should actually make this a little bit easier for our customers. So what I'm going to do is I'm going to give you just a quick introduction to our new rollout of what it's going to be like to get some tax help items done. And we partnered with a company called the TaxBook. And I'm going to show you in the TaxBook's web library how, if you had questions about particular deductions, what would you do? So you kind of pull this up here on the screen. So this is this is what our 2022 TaxWise will look like. And when you're in TaxWise in our new version, you'll have this option over here. This is the TaxBook, the web library. So this will constantly be right here. In addition to that, if you're using TaxWise, you got a TaxWise chat. So if you need to chat with a support representative, that'll be here. But going forward in TaxWise, we'll have this option for the TaxBook. When you click on this TaxBook option, it's going to populate a little box over here. So you can type up, whatever your heart's desire that's tax related, right? Medical expenses. You can type this right over here when this box populates, and it will link you directly to the TaxBook library and pull this up for you. Right now, there's definitely going to be a subscription that you want to maintain to have this, but this is that quick TaxBook deluxe edition that you have access to in a digital fashion. So you can just type it in and clearly see right over here. Here's where we're talking about the medical miles reduction for 2021. We can definitely see nursing homes can be the tax deductible. So notice how this has more of an explanation in further detail. And here's that statement we mentioned about the weight loss programs, right? Our weight loss programs are deductible medical expenses as treatment for specific disease, obesity, hypertension, or heart disease diagnosed by a physician. So TaxBook goes in just a little bit more detail, not starting away from Answer Connect is a great product, but we notice that it could be quicker. We want things to be quick for you because sometimes, in many cases, your taxpayer, the client is right in front of you, right? And you're preparing the tax return right there in front of you, right? Sometimes talk about pressure at times, right? So we partnered with the TaxBook to have this feature embedded in TaxWise so that this content will pull up for you and you can get a great explanation of what it's like to have these medical expenses and things of that nature. And you just type in what your heart's desire is, what you're looking for, what's important to you, and you can get accurate information. All right, so that's going to be in our TaxWise coming out, or launching this November. That'll be in our November edition of TaxWise. I think it might even be launching earlier. We can check with our product management team to find out, but that's our TaxBook Deluxe. All right, so now let's move on. Let's continue working our way through inside of TaxWise. Let's kind of continue working our way through to the next steps of TaxWise. I'm going to go back to our practical examples, and I want to talk a little bit about the actual charitable contributions and working our way down the itemized deduction section. So let's pull back up TaxWise on the screen here. Got so many windows open sometimes that pull up the right one. There we go. Making sure I've got the right one pulled up. All right, so here's our TaxWise back on the screen. Notice TaxWise is a browser-based solution, so we're not required to have a Windows or a Mac or anything like that. It works in a web browser, so it's very easy for you to use the product. So we've got our medical expense deductions. Now on our actual worksheet, I want to come out here to the Schedule A for just a second. And looking at the Schedule A, we see the taxes paid section. Now this could be interesting on this taxes paid section. So with the taxes paid section, I think because I have two instances of TaxWise open, let me close the other instance of TaxWise open. I have the QA account or quality assurance account. Let me close that. I think that's confusing it. And I have my version of it. So let me go ahead and refresh it. Yep, I'm gonna go ahead and re-log in. That's what it was. And log back in over there. Make sure you get the right version open. All right, so let's pull that information back up. Now we're back in TaxWise. All right, so on the Schedule A over here, I'm gonna pull this directly up, and then we're gonna see on that Schedule A list of expenses. So we got our medical, we're looking at the taxes paid. So we can see, okay, this tax is paid right over here. This is coming from her W-2, right? On her W-2, she had $2,200 withheld on her W-2. For those of you that are like in Florida or Tennessee or Nevada or Washington State where there's no state income taxes, you definitely want to make sure you keep up with the general sales tax. We have an automated way you can calculate a safe harbor minimum amount, but definitely keep up with your clients to make sure you get that sales tax deduction. Now, over here, let's talk about real estate taxes. Now, notice this right here where it says real estate tax remainder from Form 8829. Why would this be here? Why do you think this would be here? Well, if you've got self-employed clients, right? You got self-employed clients and they're taking the home office deduction, right? The percentage of the home that's being deducted. So let's say they use 25% of their home for business purposes. Okay, 25% is being deducted. 25% is being deducted on the actual 8829, but the other 75% will be deducted over here. So TaxWise does integrate and can pull the information, connects between both forms for you, so it streamlines that process. You don't have to go back and forth between the two, so it can go directly over to the 8829. So now we've got the real estate taxes, so we can definitely put in a real estate tax. So I've got $5,500 in real estate taxes right over here. Very easy for that to view that. And then in addition to that, now I want to talk about now in our state, in the state of Georgia, when you purchase a new vehicle, you pay the tax up front, right? So your personal property taxes. So what's important when you're doing your due diligence with your taxpayer is to get an understanding if they actually purchased a new vehicle or purchased a boat or something like that. Just any new significant purchase where they paid a property tax portion on it. So it's important that you go through that with your client. I'm going to kind of pull back over here on that Schedule A, and you'll see that I've got over here about $2,300 is what they paid in personal property taxes. So it's important to get a good understanding. So if you have clients, if that's just deductible for your particular state, ask that question. Go the extra mile. Don't just take the documents the client gave you and work with that. Go the extra mile on that. So in this case scenario, I've got $2,200 and I got $2,200 in income taxes. I got $5,500 in real estate tax, and I got $2,300 in personal property taxes. Now, what if you live in California? Oh my goodness, California, New York, right? Illinois, in the Chicago area. And what if you have $25,000 in property taxes, right? You're still capped, right? There's still a cap at that $10,000. What do you do? Well, if the taxpayer is self-employed, you know, that percentage of the percentage of their income that's related to that home office deduction that they can take in home office deduction, that amount can be moved over to the 8829. So you're in a really great situation when you have clients that are self-employed, just like how we're doing over here with the real estate taxes, what's coming over from the 8829 on the real estate taxes. The portion of it over here, you definitely want to make sure that you're accounting for that and making sure that you're putting that on the 8829 if there's a max on that. If there's definitely the max, don't want to leave any money on the table. So we've got that over here, the $10,000. We're working our way through that. Let's go down to our interest paid. Now, interest paid could be very interesting on the mortgage. One of the things that you want to take into consideration with your clients is there's been some laws that have passed where if they have a home equity line of credit, it has to be used for improvements to the home. All right, there's some limitations on how much mortgage interest the client can actually take. But looking over here, I've got $5,500 in mortgage interest. Now, if your client has a home equity line of credit, so they got a home equity line of credit, in addition to having a home equity line of credit, they maybe have used that home equity line of credit to do some improvements in the home, and then maybe some portions of it have not been used for the home. In order to get an actual higher mortgage interest deduction, I encourage you to talk with your clients and see if they can refinance and consolidate it all into one mortgage payment, because once that debt is attached to that home, then it can be tax deductible, right? So you want to make sure you work with your clients and talk to them about it to see about their mortgage interest paid. Now, same thing too, what's pulling over from the 8829? Definitely the portion pulling over from the 8829 is over here as well if they have self-employed and they got a home office deduction. Now, another item to take into consideration, mortgage insurance premiums, but also what about your clients? And a lot has happened with this lately. What about your clients that borrow money to make stock investments? You know, when you get that brokerage statement from your client, and I saw this, I got a close friend of mine, he, you know, trades stocks and stuff like that. You know, pay very close attention to that brokerage statement. I'm actually going to pull one up on the screen here just for as a good example. I've got I got one right here. I'm going to pull up. Pay very close attention to that. I'm going to pull up this brokerage statement. It's not going to be on the front page of the brokerage account. So I'm going to pull this up over here, and you'll see that you got to sort through the pages, go through the pages. I was able to detect that my friend had borrowed almost $500 to make some interest. I mean, not make some interest, to make some stock purchases. So when you get these actual brokerage accounts from your clients, go through all the pages, read them carefully, because that client may be eligible for the investment interest deduction, right? So I'm going to click over here on that, and I told you that my friend, he borrowed approximately, he paid about almost $500 in interest. So I'm going to click on the 4952, and we can put in whether that investment interest is coming from a K1, how it's actually paid, but getting a good understanding of exactly where that actual investment interest is paid or accrued in 2021. So it had about $495 in interest, deduction. So don't just think, okay, this on the Schedule A, this just pertains only to the actual, this pertains only to the mortgage. Also kind of just review and get a good understanding of this, that this also could apply to investment interest. Get a good understanding if the client is eligible to take a mortgage insurance premium as a deduction. Get a good understanding of that, right? Get a good understanding if the client has a home equity line of credit. If the client has a home equity line of credit, and that line of credit was maybe used for their business and not for their home, say, hey, have you exhausted, or you still need to use a line of credit? Consider refinance so they can start deducting that. Well, if they're using it for their business, they can deduct that portion for their business. But get a good understanding that if they're using the equity line of credit for vacations and to pay off their car and stuff like that, or purchase a car, it's a different story. But get a good understanding of how the client, the type of borrowing that your client is doing. So we got our mortgage introduction. We also have items that can come from investment interest over there too. So take those items in consideration. Now we're going to talk about charitable contributions, and this is a very interesting area when it comes to charitable contributions. So we got our Schedule A detail worksheet, and our Schedule A detail worksheet, let's kind of work our way down to this right over here. So our Schedule A detail worksheet, now there's some limitations, right? You know, 60% contributions exceed 60% of AGI. You know, there's some limitations around that. Now, if your client gives 60% of their income to charity, I take my hands off to them. It's a very benevolent person, philanthropic client that you have. But let's look at this for a second. So we got Charitable Miles, right? Now, unfortunately, Charitable Miles is going to stay at 14 cents. That's not going to be getting an increase. So it's going to stay at 14 cents a mile. But we're looking at the Charitable Miles over here, and we can clearly see the taxpayer has, we don't have anything with Charitable Miles. Now, the question came up where I think Crystal made a good question. Crystal had pointed out, can you talk about this for the parents that maybe volunteer for a nonprofit organization? Maybe it's a sports league or something like that. You definitely want to get a good understanding of that. Any type of volunteer work that they're doing, maybe they're helping out the homeless, maybe they're a coach, maybe they're a coach on a volunteer coaching for a nonprofit, little league, or something like that. There's some rules around this. Now you want to get a good understanding on the rules if it's a 501c3 or a 501c7. There's different types of nonprofit organization classification or 501c4. 501c3 of course can grant the actual can give you the letter, so can give the clients a letter so that dollars can be deducted on the tax return. Or 501c4 cannot do that, or 501c7. So get a good understanding of that. But the charitable miles that are driven, work with your clients to understand that your mileage matters, right? If you're helping out an organization, your mileage matters. So for instance, let's say for our taxpayer, I think I had some miles estimated out over here. Let's say for our taxpayer that we had 450 miles for taxpayer. And then we also have for the spouse, we had about maybe 225 miles. Now you're probably saying $95, that's nothing. It's still a way, because remember, you're grooming your clients. The client may not have all the deductions right the first year. You are literally training your clients and developing them to be good stewards of their resources, to be able to keep good, accurate records. So the better you educate them and train them and walk them through on how to use this, the better it can be. So we're looking over here. We can see, okay, we've got this 14 cents a mile, so we got 675 miles, and we've got this $95. Now, looking directly at this, we can see the charitable organization has, let's say they gave $1,000 to, Salvation Army, Goodwill, or something like that. And we'll walk through this over here. Now, there's some rules, there's some limitations over here. We're not going to go specifically on the 30% limit to organizations and things of that nature, but I want to make sure that you also work with your clients when it comes to the non-cash contributions, right? This is important. Now, the IRS is definitely, there's some rules around this, and you want to make sure that you adhere to those rules around this and guide the client correctly. So if it's in excess of $500, you'll see use form 8283 if the non-cash contribution is in excess of $500. So if it's just, if they say, hey, well, it's a link to that worksheet. Let me go over to that 8283. If they just said, hey, I gave $250 worth of clothing to, Goodwill or something like that, that's a different story. But I'm going to go over to our 8283. And when I go over to the 8283 worksheet, that's why I want to encourage you, work with your clients to make sure they fill out the slip, get the documentation from the nonprofit organization they gave the items to, they donated it to. It's going to help them understand a good value of what the thrift shop value is. So we can see over here, the date of the donation is November 15th. The date acquired, you could have a generic various date. You got to have a good understanding of what the date is. And then also, how was it acquired? Was it purchased? What's the basis? What's the estimated amount do you think the client paid for it? And what's the fair market value? That fair market value would be like the thrift shop value of that item. All right. Also talk to your clients. Does any of your clients have a old vehicle sitting in their driveway? Right. My neighbor across the street, he's had a car. I hope he's not listening. He's had a car sitting in his driveway for the last 2 years now. Guys, just donate the car. Okay. Sorry. Just kidding. But anyway, go ahead and talk to your clients, see if they have an old vehicle or something like that they can donate, and make sure they get the form 1098C when they donate that vehicle. So being able to take advantage and maximize these non-cash contributions, and it could be just old clothes, old things they've got laying around their home, make sure that they pay very close attention to those items. All right, so looking at this, we've got some non-cash contributions, some household items. Let's come back over here. We've got, let's go back to Schedule A detail. We have money they gave to charity. We also have items from the 8283, that's $600, that's where that's coming from, right? Now let's look at our Schedule A. Let's take a good look at our Schedule A. So we got some medical deductions, we got some state and local deductions capped, we've got some mortgage interest. All together, we've got about $26,761. That's pretty good, right? Automatically our software is going to default and take that itemized deduction. It's automatically going to happen and take that. So if I come over to the 1040, and I'm going to link over to our 1040 on the return, 1040 right over here, that $26,761 is going to be right here. It's going to default to that. So if you elect to itemize deductions, even though the standard deduction is larger, check here. So I'm going to just uncheck that for just a second. But automatically TaxWise is taking the larger tax deduction. And you can see the client's getting a pretty good refund. The client's getting a $4,000 federal refund and a $1,500 state refund. So that's actually pretty good. That's very nice. Now let's backtrack for a second. Let's go back over to our Schedule A. And I came a little bit off track. Normally I have my numbers pre-populated over here. I came a little bit off track too. So I'm going to make an adjustment. So let's say this client was very, very, very close, right? Let's say that they were really, really close. I'm going to take the fertility treatment out for just a second. All right, and let's come back over to our Schedule A. So they're very, very close to having some pretty nice deductions. So right now they're at about $22,000. So this is a taxpayer. They're married. They're filing jointly. Married, filing jointly. That's what's happening. So since married, filing jointly, what happens? What's if you're married, filing jointly couple? What's your tax deduction? Your standard deduction, married, filing jointly. Married, filing jointly, you're going to have a $25,100 deduction, right? So clearly this $25,100 exceeds our itemized deduction. So let's take a look at this here. So we're seeing right over right now, let me just kind of shrink that down for just a second. We're seeing right over here right now, got the standard deduction, we've got $3,807 as our federal refund and $330 as our state refund, right? Now let's go ahead and force this deduction. Let's kind of add it, and let's add it up here. Let's grab my handy dandy calculator. Did my calculator go hiding? My calculator went hiding. All right, let's pull up my calculator. So I'm going to combine these dollar amounts over here. So we've got the 3807 plus the $330. So we're getting a tax refund altogether of $4,137. That's great. Let's go ahead and book the cruise. Let's schedule the vacation, right? That's a good, nice refund, right? $4,137. Now let's force the itemized deductions. Check the box. And let's force the itemized deductions. Now let's look at what we got over here. Now we have I'm gonna pull up another calculator. And it looks like our federal refund is $3,471 and our state refund is $1,206. So let's see what happens now. Let's see the change over here. So $3,471 plus $1,266. Now let's pay close attention to this right now, all right? Our refund combined is $4,737 when we force it. All right, when we force the itemized deduction, even though the itemized deduction is lower, let's look at the itemized deduction. The itemized deductions total out to be $22,261. All right, so the itemized deductions are less than the standard. The standard is $25,100. So we're coming in approximately at maybe about $3,000 less on the standard deduction, almost close to $3,000 less on the standard deduction. But look at this, by forcing the itemized deduction, the client's getting approximately almost about $600 more of a refund. All right, so this is a big difference, definitely a big difference. I'm curious, how many of you actually elect to have your bank product, if you're doing a bank product, have the refund deducted from the state? How many of you actually do that? All right, so if it can't get from the federal, maybe they've got an issue going on, right? Bradshaw says yes, maybe they got an issue going on, and they owe some student loans or something like that. But you also elect to have the your tax prep fees paid from the state refund. So we got some people saying yes to that, right? But you're looking directly over here, you can see a difference of when we force the itemized deductions. You can see definitely a big difference with that. All right, so let's look at some of these questions here. And just to recap a little bit, we pretty much covered, we used the virtual tax office is what we utilized here. So we a browser-based solution that can access anytime, no installation or updates are required. We got a secure two-way file sharing and online document storage, and also cloud-based security and reduced office costs. That's kind of what the product that we use for TaxWise using our virtual tax office. That's what we covered here. But I want to make sure I answer some of the questions that we've got here in the chat. So I'm going to have that up on the screen here while I answer some of those questions in the chat box here.
You want to go through it while we launch the last polling question?
Sure.
Okay, perfect. Yeah. So, and the last polling question for today is, would you like a more in-depth demo highlighting all the time-saving tools available with TaxWise Online? As Anthony mentioned several times, the solution that he used today to showcase how to maximize tax deductions is TaxWise Online, which is a virtual tax office solution, cloud-based, meaning you can access it from anywhere, anytime, and would like to show you more. So if you'd like to receive more information, register for a product demo, and learn a little bit more about what TaxWise Online can do for you, go ahead and select yes. The option for no at this time, it's okay as well. I'm already using TaxWise, it's an option. We'd like to show you what we can do for your business and how other tax professionals using TaxWise have been able to grow their tax preparation business and benefit from a full cloud-based tax prep solution. So we'll go ahead and leave the polling question up for a few more seconds. Anthony, do you want to go through a few of the questions that we see in the Q&A?
Yeah, absolutely. While those questions get answered. So we have a question. So as Jackson's asking, is I have a client that donated a car to a family member but didn't get a 1098-C. What do I do that can help that client? Absolutely. So definitely would need to be some documentation if the car was donated. Now, if it's donated to a family member, that's not a 501c3. A vehicle, the assets need to be donated to a 501c3 organization in order for that 1098-C to be generated. So if I give my son my car, there's not like a necessary charitable contribution deduction because my son is not a 501c3. But when you donate the vehicles, the assets to a 501c3 organization, a nonprofit organization, then a 1098-C can be produced. So that's a great question that you've got there. Any other items that you want us to cover, or we can stick around here to answer any of the questions? We'd be more than glad to.
No, yeah, absolutely. If as you review additional questions, just a call out. Interested in looking at TaxWise Online, there is a page that you can visit, engagetax.wolterskluwer.com/TaxWise online overview video overview, and that link will be included in our post-event email that we will send within the next 24 hours with a link to watch the recording. So look out for that. And the other thing I'd like to share is, let me share my screen real quick. We have a tax call live in Houston coming up in September. So if you are in the Houston area and you would like to see us in person, we will be there on Thursday, September 22nd from 3 p.m. to 6:30 p.m. Anthony will be there as well, presenting on the top 5 overlooked tax deductions in schedules A, C, and E. We'll be there with our bank partners, Refund Advantage, EPS Financial, Santa Barbara, Republic, as well as Protection Plus. It's going to be a great event. We'll have a reception after the educational part of the meeting. We'll have roundtable discussions. So we look forward to seeing you there. Anthony, you want to add anything regarding the session itself, the top 5 overlooked tax deductions in schedules A, C, and E?
Yeah, Luis, absolutely. So we were able to absolutely. So it looks like Consuelo is saying, are you planning any events in Las Vegas? Because we actually did this exact same webinar of this session in Las Vegas last month. And what was interesting too was when we got to Schedule E, that was the portion that was that a lot of our customers or attendees paid very close attention to, because determining, is that client eligible for specific deduction? Are they eligible to be treated as a qualified real estate professional? Are they eligible to be treated different ways how they treat it for the tax purposes when it comes to owning real estate property, investment property. So we covered that on the Schedule E portion of that, and that was very important too. And we were able to talk about some Schedule C deductions, but many of our clients have really enjoyed toward the tail end on the Schedule E side of it. So definitely stay tuned for that. Come out and join us. We're more than glad to do that. We've got some other live events that will be taking place this year as well. We'd be more than glad to post those on our website to help you.
Excellent. Thank you, Anthony. I posted the link on the chat. So definitely looking forward to seeing everybody in the Houston area. And as I mentioned before, you will receive a link to watch the recording of this session within the next 24 hours. Any questions that you still have posted in the Q&A that we have not answered will stay here over the next couple of minutes. But at this point, Anthony, thank you very much for another great presentation, and thank you everybody else for attending. We'll see you next time. Bye-bye, everybody.
All right.